Arnav Das as well joins in on the show to talk about what he's making of the global markets. Arnav, hi, afternoon. Good to have you in ET Now as always. Thanks for taking the time out. An outsized cut, Arnav, by the Fed. What is it going to spell for emerging markets? And is India still the preferred of the lot from EMs?
Well, thanks for having me. Always good to be here. Yeah, look, I think the Fed, sort of began teeing up this bumper first rate cut in Jackson Hole back in August, and gradually moved the market in that direction, but not fully. So I think this 50 basis points cut, it's quite unusual. For a variety of reasons. Usually you don't lead with a 50 unless there's something seriously wrong. But I think in a way, perhaps it's a dovish 50, and to some extent, it's a hawkish 50, right? Because um, they were sort of signaling maybe not that many more 50s to come, right? Perhaps none. And the market is still pricing a bit more of a front-loaded rate cutting cycle than the FOMC dot plot. But I think, on net, the balance of the effect is somewhat dovish, as we see in the reaction in the stock market and the steepening of the U.S. yield curve into positive territory for the first time in quite a while. So I think, what the market is telling us is that the Fed is going to probably be quite successful in engineering a softish landing. And I think ultimately that has to be good for the world economy, because the US is still the main source of demand, right? China is growing more slowly than before. Its trade surplus is increasing. There are concerns about overcapacity and some issues on that front in Europe as well as the US and even in some emerging market countries, including India, Brazil, and others, right? So I think it's quite important for emerging markets that the Fed act expeditiously to put a floor under the US slowdown, engineer that softish landing in the context of a somewhat softer dollar, and help to lift the global economy once again, right? Because China is going to be doing less of the heavy lifting. India is doing maybe more than its bit, but it's probably not yet quite big enough and quite globalized enough to make enough of a difference to offset a slowdown in both the U.S. and China, at a time when even Europe is sort of okay, but not doing that, not growing that strongly.
But what about the thesis that earlier whenever US Fed has cut the rates by 50 basis point, it has been followed by a bit of a recession. How would you rate 2024 to be different than 2007?
I think there's a host of differences between this, so-called cycle and the 2007 global financial crisis, and usual, sort of, if you want to say, garden variety recessions in recent U.S. history. Most of the time, the cycle is Fed-led, right? The easy money period sees a lot of leveraging up and a lot of development of imbalances in the private sector, which lead to overinvestment, overconsumption, and overheating eventually. And that causes the Fed to have to tighten, take away the punch bowl, as the saying goes, and then the economy slows down. And often there's some sort of a financial accident, right? Something breaks when the Fed tightens, as the old saw goes. This time, I think, famous last words in finance, but this time is quite a bit different. I mean, there have been financial eruptions, SVB and other relatively small regional banks. But there hasn't been, I don't think, the kind of leveraging up in the private sector that usually takes place in the easy money period. In fact, I would argue that we had such a long period of lowflation and so easy money because the private sector was repairing its balance sheets, right? Deleveraging, particularly the household sector and the financial sector. And the corporate sector was leveraging up, but not really for investment until very recently. Now what's happened is we've had a bit of an investment boom, but the bulk of the financing of that, or the change in the leverage, has come from the public sector, both through fiscal transfers during COVID, but also through the Inflation Reduction Act and the CHIPS Act, and the infrastructure bill, right? So a lot of the kind of conventional things that go on in the traditional American economic cycle have not happened this time. It's been less Fed-led. It's been about a shutdown of the economy due to the lockdown and a reopening. It's been about an inflation shock driven by fiscal transfers and by supply-side issues due to COVID and due to the war in Ukraine, rather than the Fed per se. And so I think, that it's quite a bit different, and I think we need to be quite careful in applying the usual historical cyclical template to this turn of the screws or loosening of the screws by the Fed. So I think there is a decent chance of a soft-ish landing, maybe not a full-blown soft landing. And I think the Fed is pushing us in that direction with this bumper cut, which is easing financial conditions, which are already easy to begin with. That should help to normalize the cycle. And eventually, I think we're going to have more conventional, Fed-led cycles.
Given the world dynamics right now, with the move from the Fed, what's happening in some of the Far East economies as well, and of course India and that entire pack, too, with the impending US elections, what does it all spell really for various asset classes? And I'm going to include gold in here versus equities. In the very near term, who do you think is going to outshine?
Well, look, I think, we're in a very complicated world with a great deal of uncertainty, certainly as regards the American election, and as regards the implications for the rest of the world, and indeed for the Fed. I think, what's on offer in the election is two very different visions, starkly different in some respects, not so different in other respects. So I think we could get quite a bit of a different set of policies under these two scenarios. And I think what the market is pricing is some, I call it quote unquote bimodal, something like 50-50 or something like that chance of either a Harris scenario or a Trump scenario. Now, I think one thing we can say with reasonably high confidence is that with Harris, we would have a more multilateralist, more globalist, more rules-based approach to the international economy, somewhat America first, as we've had under Biden, but under Trump, it would be significantly more America first, more, I would say, unilateralist, not isolationist, but unilateralist, and possibly more adversarial on trade and other issues with China and with Europe, and with other allies and partners and friends, possibly including India. Right. So a much more complicated kind of world and, behavior in the international system, which probably will have further effects of, nearshoring and maybe more onshoring, since there's a significant chance that there'll be a more aggressive renegotiation of USMCA under a President Trump than under a President Harris. Right. So the back door that China and perhaps other countries are allegedly using through Mexico to gain access or to retain access to the U.S. market, that might be further tightened, maybe significantly under Trump than under Harris. So I think it's going to be a considerably more complicated world. I think the good news for India itself is that India is probably the country that is among the most hedged, if you want to put it this way, between Trump and Harris, right? India is going to probably chart its own course, which I think is going to inevitably, sort of almost inescapably draw India closer to the West and towards the US because of challenges with China, and because India is a growing economy and, obviously clearly a democracy, and also because of the diaspora in the US and the West, increasingly close ties culturally and business and finance to the West, right? China is heading in a different direction, which I would say is more about, in a way, China first, right? China needs to take care of its own short-term economic challenges, as well as, deal with a world that is more unfriendly, particularly a US that is more unfriendly to China.
Thanks, Arnav. Great to have you on the show. Thank you so much, as always, for taking the time out.
My pleasure. Thanks for having me.
If you like this video, then like, share and subscribe to ET Now.